Mortgage rates hit a 30-year low.
30-year low.
30-year low. Yes, they did. Well, they're the lowest they've been in the last 20 months. How's that?
20 months. In the last 20 months. Yes, rates are at the lowest. And where are they going? We're going to help you out with that.
Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thanks for joining us, everyone.
Hi, DeLynn Gaston.
Hello. On our new time slot, here we are at 5:30, and we are live.
For those of you who watch us live.
That's right.
But those of you who watch us in the gallery, you can watch us 24/7.
Aren't you lucky?
Aren't they exciting?
Just what you wanted to do.
Yeah, so you know what? We have some exciting news. We always have exciting news.
We think so.
Well, we think it's exciting. For those of you who like to save money.
We have no life, though.
Yeah, basically. We live, eat, and breathe this exciting stuff.
Yes, this exciting industry.
But right now, it's an amazing time in our lifetime when you think about it. Or most people's life. Like my kids, it's better than their whole lifetime.
Yeah,
so.
Yeah, I guess so.
Yeah, when you put it in that perspective.
In that kind of perspective. Interest rates are at lows. They've gone back down again, as we all know. They've been at 30-year lows for a long time.
Yes.
And then they started ticking up a little bit, so that kind of took us off the 30-year lows.
But now they're back down.
You know, it's funny you say when you put it in perspective like that, you know, they do those, what is it, like the University of Wisconsin or something like that does those studies, you know, like the children graduating this year, you know, never knew McDonald's had like, you know, styrofoam containers or something like that, you know, like odd things. They've never known what it's like not to have a remote on the TV.
Or your favorite sports team winning a Super Bowl. Because for some people, it never happens. It's true, though.
Are we back to that again?
Yeah,
Are you going to bring up Dallas again?
No, Dallas won in 96. So, yeah. But how many years ago was that?
My son was born in 95, so it was in his lifetime.
So it's 18 years ago.
Yeah.
So go figure. So we are at lows right now. So it's a great time. Today we're going to talk to you about whether it makes sense to refinance and what can affect the rate and what makes a super rate so low when you see, you know, this advertised rate in the paper or when you drive by your local bank, they post this mortgage rate. And we're going to tell you what can impact that and change it and what the real story is.
Right. And you hear all the time on the news, oh, rates are going down, rates are going down.
Do people call you all the time?
They do. They call me all the time. Imagine that. There's differences between what the Federal Reserve is doing and what mortgage rates actually happen and what the markets are doing. Yes, the markets drive the mortgage rates, but just because you hear, you know, people saying, you know, these low rates and things like that doesn't mean that the mortgage rate is that low at this point.
So it's really driven by the bond market.
The bond market is what you need to keep your eye on if you are looking at refinancing or buying a house.
So here's a good rule of thumb. If bond rates go up, mortgage rates typically come down.
Yes.
If bond rates go down, it means mortgage rates go up. So they kind of work in an opposite fashion. So.
And just to, going along the same lines with an opposite, bonds also go opposite from the stock markets.
And they go sideways too.
So if the stock market is doing really, really well, chances are bonds aren't, because what happens is people take their money out of bonds typically, and they put it into the stock markets when they're doing that, and vice versa. So those two kind of, you know, it's not carved in stone, but they kind of
that is true,
offset.
But not true every day. So
not true every day. Did we make that crystal clear?
Yeah. So we should run for office because, you know.
I know, we'd be perfect politicians.
But it does usually work that way because people are looking for a safer investment when the stock market's going down.
Right.
They typically look to bonds as a safer haven or consider. But depending on the bond, depending on the market, you know, I mean, but that's a whole nother story. So we don't even want to talk about that here. So.
But yeah, the key is just don't think that if you hear rates are getting better, rates are going down, something like that. That doesn't necessarily mean your mortgage rates are changing.
Exactly. So when you get the pre-recorded message, the teleprompter, what do they call those things? Those auto dialers, and they go,
yes, they do.
Oh, time to refinance. Government says, rates are low. You should refinance. Find out why. Press 1 now.
Yeah.
Or press 2 to be
removed from the list.
Yeah, so
now, speaking of the government, so this is what this is.
The government? What do we want to talk about the government for?
This is what they've said. They have said that the rates are at their lowest for the last 20 months since May of 2013, and they're actually a full 3/4 of a percentage point below where they were a year ago.
Wow.
So that's a lot. Now, last week we did some comparisons and such with
the new FHA, which are
with the new FHA premium,
right?
Almost cut in half. That
almost another political quote. Almost.
Pretty soon. That made a difference in your payment, and guess what? The interest rates being 3/4% lower, also lower payment, or maybe buy more house. But we've got more on that coming right up. We're going to take a quick break, and we'll be right back.
Everyone's story is different, so why be limited to just one or two options? With Norcom's Norflex Home Loan, you're given the flexibility to tell your story. Pick your terms from 8 to 30 years, all while maintaining a low, fixed mortgage rate. You can pay off your loan more quickly or choose a term based on your budget and timeline. Whatever you do with the Norflex Home Loan, make it part of your financial plan. Norflex. Short-term, long-term, your terms. Apply online at norcommortgage.com.
This is one bee that loves going to the dentist because it's made for you and me.
My name is Dr. Becerra from New Tampa Pediatric Dental, providing a comfortable atmosphere in early dental care. Gives kids a great start for healthy teeth and gums for life.
When I go to Dr. B, they don't do anything to hurt you.
I used to be afraid, but I'm not now. I'm not afraid of the dentist anymore. I love to see Dr. B.
Call New Tampa Pediatric Dental today.
Revolutionary in his field, Dr. Bonatti created, perfected, and patented the Bonatti spine procedures. Using his genius, Bonatti invented precise tools necessary to minimize surgery, scarring, anesthesia, and recovery. So successful are the Bonatti spine procedures, they consistently reflect over 94% patient satisfaction. 45,000 successful procedures have been performed exclusively at our location. Nearly half our patients suffer from failed back and neck surgeries at other facilities. Bonatti succeeds where others fail.
Mortgages don't need to be complicated. At Norcom, we're here to guide you through the process. By following our tried and true path to success, we make homes happen. To get started, give us a call or apply online. A trusted mortgage consultant will reach out to you to find out what your goals are. Whether you're in the market to purchase a new home or refinance your current home, we are dedicated to helping you achieve your goals. At Norcom, we'll provide a best-in-class customer experience. Once a plan is established, your mortgage consultant will analyze your income, assets, and credit profile in order to customize a plan for you. If you're planning on moving in the next few years, we might suggest an adjustable rate mortgage to be the best option for you. If you're a veteran, we'll get you started on a VA loan with 0% down. And if you're thinking long-term, a 30-year fixed loan might be your best fit. Our professionals are up to date on market trends and will help you make the best decision in choosing your rate. After we've found the program that's best for you, we'll then need to collect some information, including pay stubs, bank statements, and tax forms. Our underwriting team steers a loan through the approval process to verify that all the information you've provided is correct. As the underwriting process is taking place, an appraisal is ordered to determine the value of your home. A professional, local appraiser specializing in your area will determine the home's value. The last leg of this journey is closing your loan. While taking care of any last-minute details, our closing team will work on scheduling your closing date and location. It's that simple. Thank you for taking some time to walk through the mortgage path with us. Remember, we're always here to answer any questions you may have. It may seem intimidating, but here at Norcom Mortgage, we make homes happen.
Welcome back, everybody.
Welcome back.
Dun, 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 dun.
What are you singing now?
Welcome back, Cotter.
Oh,
Don't you
welcome
remember
back,
that?
Cotter. I didn't get it.
Thank you.
There you go. The producer is singing over there.
Mr. Cotter, I don't have my homework handy.
I do remember him. Was that Horseshack? Or was that
No, that was
Epstein?
Epstein.
Epstein.
Yeah, Epstein. I don't have my homework
Love
handy.
that show. They were all good, weren't they? That was
yeah.
a good show.
John Travolta, back when he was really skinny.
Yes.
Have you seen him lately? Hope you don't watching this, John.
Yeah, like John's watching.
He's thickened up like a lot. I mean, like really thick.
That's nice. Thickened up.
Okay, that's a politically correct way of saying he got fat, okay?
He's not fat. He's fluffy. That's the other.
He's not that big, though. I mean, never mind. He did, what was it? He did so many movies. Anyway, we got to move on.
We just get off onto these tangents. I don't know. What else did John Travolta do? I don't know.
Welcome back.
Anyway, so
what were we talking about? Mortgage
back
rates?
to interest rates. Back to mortgage rates. Mortgage rates, interest rates, that
Fluffy
kind of thing.
John Travolta
So
is
what
so
the
much more
government,
interesting.
what the government has to say. It depends. So what the government has to say. Okay, so first thing,
have to read my
again,
notes,
we have the interest rates are the lowest in the last 20 months since May of 2013, which is great. All of these things, the government is keeping the interest rates low to stimulate the economy so that we can, the economy can grow again, obviously, and everybody can get back on their feet. So what they're doing is keeping rates low. They're changing some policy. They're lightening up lending. They're lowering down payments and everything. All of these things combined together. So
well, and you know what's so funny too? When you look at statistics like on mortgage applications when they take them, when rates are the lowest, the application for not only purchase and refi applications are the highest. So it makes sense. So it brings more buyers to the market when these rates are low like this. So.
But the government's anticipations
You
were
love
not.
the government.
We're
You keep
not
talking about those things.
they weren't met. Is the bottom line? The government would have thought, oh, there should have been a lot more people buying. There should have been a lot more people refinancing. We've got these great low rates. The prices are down. You know what's going on? How come things aren't moving along more? So they're trying to make some changes, and they are talking about keeping the rates this low, which of course is spurring.
So your prediction, our rates are going to be lower? What's your prediction,
In the
DeLynn?
short term, this is what the government says.
Do we have our crystal ball?
Freddie Mac, the Federal Home Loan Mortgage Corporation, expects that rates to be a fairly short-term opportunity. So they don't expect this to last for the long term. But anyway, they're projecting that 30-year rates will remain in the 4% range for the first half of the year as investors seek safety in U.S. Treasury bonds. This is what this says. This is an article by Kirk Haverkamp.
Who's he?
One of the economists. I follow lots of economists.
Okay.
In response to financial uncertainty in foreign markets, but then move higher as the global economic picture stabilizes. So remember we were talking last week about the European Central Bank?
Yeah,
and
it's a mess.
It's a mess over there. And as soon as that stabilizes, they're going to expect this to stabilize. And then that's what's keeping our rates low right now, one of the factors that's going into it. So as soon as, that kind of stabilizes out, so will we, and they're going to expect rates to go up again.
Well, right now we're at the lowest since May of 2013.
Right.
So, and applications are also, ironically, the highest
At
since
an all-time high.
May of 2013.
Right. So people are starting to come back into the market. And I guess the point of this whole thing is, it definitely, if you haven't looked into it already, you should. If you've been thinking about buying a house, it probably is time to act now.
If you're thinking about refinancing, check with your bank and see what, at least figure it out. And we're going to try to show you what to look for maybe if you're thinking about if it makes sense to refinance. I mean, there's no obligation to ever look. If you can save money, why don't you do it? People shop around for, they go to Walmart, they go to Target, they go to all these different stores and they say, who's got the best rate and who's the cheapest?
Who's got the best coffee pot? The cheapest coffee pot, I got a coupon.
But they don't look at their own personal financial scenario. I mean, even if you bought a house 6 months ago and rates are lower now.
Right.
and you
That's a
paid
great point.
MI and the market went up, maybe it makes sense to look at refinancing.
I mean, some
just
people, it's
check
a great
it out.
point. Yeah, if you shop for the
At least-
best coffee bean, you should look more importantly at your mortgage.
Because
and
you're
your
going to be
personal
married to
finances.
this thing for 30 flipping years, so you ought to check it out.
The biggest investment that a person makes in their lifetime in
Yeah,
most cases.
and
so.
everybody should have 6 or
Outside
7
of
of
marriage.
those.
Okay, so in response to the brightened outlook, Freddie Mac is now expecting, I thought this one was interesting,
You want to read all the government stuff.
that home prices are expected to rise by 3.5% in 2015.
So that's a nationwide
That's
figure.
nice.
So local pockets, like certain markets like Florida, for example, are much, much higher because they were hit much harder back
Right.
when the market collapsed.
But still, even if the rest of the country on a national level, 3.5%, somewhere in there, that means our prices are going to start going up too. So that means if you currently own a home, that's good, because if you're underwater, maybe you're going to get out from underwater. If you're not underwater, or, but you're paying PMI, maybe it's going up enough that you can.
That was my swim movie mistake. Sorry.
Okay, yeah, you be the entertainment.
That was underwater.
He's swimming. If you bought a house anytime in the last few years and you have PMI, private
Right.
mortgage insurance, and with the house prices going up, the values going up, maybe you can refinance, or maybe you can, petition to have your PMI dropped. Things to look into. What is he doing? Quit it. And if you are looking to buy a house, again, house prices in 2015 are going up.
This economy is strengthening, whether you
you
believe
might
it
wanna
or
buy
not.
now.
And I don't want to say thanks Obama, because everybody does that when things are going better. I'm not going there either way.
I think that this is
I'm
definitely.
not saying I'm for or against, but look at what's going on out there.
It's a bit-
Prices are going up. Unemployment numbers.
I was just going to go into that.
Unemployment
But I was
numbers are
afraid
down.
to say government.
Yeah, well, I'm not saying government. It's a fact, okay? I mean, fuel prices are low. I mean, we got great fuel prices. So,
$1.89.
Yeah.
$1.89 I paid.
woohoo, I mean, it's sad what we get excited about paying less than $2. It's what we should have been paying all along, but that's a whole nother.
But over in Europe, they pay like, $7 a gallon.
Well,
and that's normal. That's, everybody does it over there.
Well, that's a whole nother.
They think we're spoiled.
Well, we are spoiled here. So, but let's talk about comparing.
Yes.
What makes a mortgage rate, and this is
Right.
These are good questions when you go to your loan officer, and if you know this information, whether you're looking to buy a house or you're looking to refinance a house. It makes a difference on the rate.
A lot of things make a difference, and people don't know it. We get those phone calls. People say,
People call
"What's your rate?
her all
What's
the
your rate?"
time.
I'm looking. What's your interest rate? What's your interest rate? What's
I'm
your
sure
interest rate? It's not that simple anymore. In the old days, 20 years ago, we used
Mm-hmm.
to just be able to say, okay, this is what the rates are. They post them, and that's what it is. There's a lot of factors that go into it
There
these
are.
days, and it has to do with risk.
Tell us about this, DeLynn.
Has to do with risk.
Risk first, reward.
Just like, when you're getting insurance or something like that. If you had a whole bunch of accidents, you're going to be paying a little bit.
Did you pull my motor vehicle report again?
For your insurance.
It wasn't my fault.
Same thing with your mortgage interest rate. If it's a riskier loan, and that doesn't always just mean credit. People say, oh, but I've got good credit,
I've got
so
good
I should
credit.
be getting
but
the best.
Maybe how good is
Not
it?
necessarily. A couple of things go into it. First of all, the question that they're going to ask you, are you purchasing a house or refinancing a house? Because that's definitely a factor. If you're purchasing or refinancing,
It's a huge difference.
it's going to make more questions is what it's going to make.
Well, sure, because a purchase transaction is typically going to be less riskier than a refinance, because a lot of times in refinancing, you're taking cash out, maybe
Right.
looking to do some home improvements. So your lowest rate on a purchase versus refi is going to be a purchase. So sometimes when you see that teaser rate, that's probably going to be for a purchase. So
Right.
keep that in mind.
It's an
So
all the
when you're
best
looking.
ideal thing.
So don't just think, oh, I saw 3% somewhere. You need to look at all these factors
Right.
that we're going to go over with you.
The other thing that comes up is the loan size, and people will say, "Oh, but my loan's only $60,000." Well, that doesn't
Or $40,000.
necessarily- is your loan above $100,000, below $100,000, above $150,000, below $150,000? And the reason for that is it costs banks and lending institutions it costs them money, personnel that they're paying.
Sure.
You know, they're buying the funds, you know, reserving the funds from the Federal Reserve, things like that. It costs to do these transactions. It costs them the same amount of money as far as the employees that they're paying and health care and things like that, if they're making a $60,000 loan or if they're making a $600,000 loan. The same cost factor.
That's a great point, DeLynn. You're so smart. But you know what? Here's the thing. So people say, well, I got the smallest loan, so I should get a better rate.
Right.
Or, no, not necessarily. Or if I got the biggest loan, what if you have a loan that's a jumbo? You know,
Right.
Now that affects your rate too, which, you know, if you're over $417,000 loan amount, you're going to pay a higher rate.
Jumbo.
So, you know, they want you to be in this sweet spot in the middle.
Right.
You know, what is that perfect world? You know, probably over 250, but less than 417. But again, check with your lender. It will vary by lender. So there are adjustments to the rates for all different loan sizes. And that applies to purchase and refinances as well.
And the next is what we call the LTV, loan to value, or if you're purchasing, what's your down payment? Are you putting 5% down, 10% down, 20% down? Again, it goes back to the risk factor of the loan. Somebody who puts 5% down, that's not a lot of money that they're putting into it. It might be everything to them.
Or if it's a refinance, they have 5% equity per se.
Equity in the property, right.
So in other words, your house appraised at $100,000 and you're looking to borrow $95,000. You only have 5% of your skin in the game.
Skin in the game.
You
I
like
was
that?
just going to say that. Yes, that's the phrase
Great
that they
mind
like
things.
to use. Skin in the
Versus
game.
having 10%, which makes you at lower risk, or even
20% or $20,000
So the more
into
skin,
the transaction.
the more skin you put in the game, okay?
Right.
It's like a snake, right?
The more skin
Did
you
I
put
tell
into
you
the
I hate
game, the
snakes?
better your interest rate's going to be. They feel you're a safer risk because you have more
hate
money in the
snakes.
transaction.
I hate snakes.
Snakes and spiders and zombies.
I don't like spiders and snakes.
Walking Dead coming up next week. Yes, it's coming back.
It's Super Bowl.
Zombies.
Nobody cares about that right now. Okay?
Super Bowl's coming up
So
this
let's
week,
talk
next
about it.
week.
So we talked
Okay.
about loan to value affecting what your rate could be. The next big thing is everybody says, oh, I got good credit.
I got good credit.
Well, what is good
my
credit?
credit's great.
Okay, is good credit a 660? Yeah, that's okay. Is 680 good? Yeah, it's good. But that doesn't mean, again, you're going to
In
get...
mortgage rates, it doesn't say good, bad, fair.
Yeah, ugly.
how they
Yeah,
price it
although
out.
some of these credit sites do that, you know. So there's actually scales of credit scores. So, you know, 620
score
to
buckets,
639,
we call it.
640 to 679, 680, 719, 720, 759, or 760 plus. Actually,
Exact buckets of where your score falls makes a difference on your interest rate.
yes, it will. And here's the other thing. Here's our political claim. It can vary by bank
Yes,
where their cutoff
lender to
is.
lender.
There's actually some lenders that don't care. You know, you either qualified or you don't qualify. You were approved. They don't have an adjustment to credit scores. But most lenders will adjust your rate based on that risk score.
Credit score.
And they go by your
Middle
Middle
score.
score.
The middle score. So I always like to say it's kind of like the Olympics, like skating or whatever. They
Yep.
throw out your highest score, they throw out your lowest score, and they use the middle score. And keep in mind, if you are, you know, two borrowers, husband and wife, whatever, borrower
Or
one,
Mr.
borrower
and
two,
Mr..
Mr. and Mr., Mrs. and Mrs., whatever. They
Did
are
you
going
just
to
say
use,
that on TV?
you started it.
It's I forgot. It's very acceptable.
They are going to use the lower of the two middle scores. So if your borrower number one, as you can see on our screen, his middle score is a 740. Borrower number two, the middle score is a 733. They're going to use the 733 because it is the lower of the two middle scores. That may or may not have an impact on the interest rate.
Yes.
Because depending upon where that bucket is.
Yeah, where
you
is the
like how I made
adjustment?
it at the 740 mark.
I
so
do. I
in
do. I
this
like that
case
very much.
here, it probably would affect the interest
Now,
rate.
here's a little tip to the wise. If you have a creative loan originator working with you, you know, if you have one borrower with the lower score maybe you don't need that person to qualify. Maybe you leave them off and just put them on the deed. So
definitely talk to your loan officer, because they can perhaps help you through, maybe work out the best thing. The other disclaimer that I wanted to say is
disclaimers.
Yes.
Do we have stars all over this?
These disclaimers. Credit scores don't affect them all. For example, on your government loans, your FHAs, your VAs, things like that, the credit score buckets are not necessarily as stringent.
This is more on your Fannie and Freddie, your conventional lending that we're speaking of.
Unless you're under the 640 mark, and that's when, even the government loans start to look a little closer.
A lot of the lenders may hit you for that, or they'll say your debt ratio can't be as high because your score is not as low.
It gets a little stricter. So they did say that they were going to be loosening up lending guidelines and stuff. Yeah, we're still waiting.
Yeah. Checks in the mail, and it's coming from the government, so you can count on it. Thanks, Obama. Sorry.
All right, so now the last thing that I wanted to mention as far as interest
People
rates
are
go.
going to think I'm against Obama, because I'm not.
He's against the government, period.
I'm not against him, because they could fire me right now.
Yeah.
They could ban our show from the airwaves if we bash them too much.
So the last thing that I did want to bring up, because it's something that we hear a lot of, the question comes up about interest rates, discount, paying a discount point.
And you know what's so funny?
To pay a point or not to pay a point?
Yeah, that is the question.
That is the question.
So you know what's so funny? That under recent statistics from the government, the average borrower actually paid 0.7% discount point to get the rate that they have. So what does that mean in layman's terms? Well, on a $100,000 loan, the average consumer paid an additional $700, 0.7, to get that rate.
Right.
So
now, it's not as popular. It's absolutely available to everyone. It's not as popular in certain communities. I think over out west, I think they're very used to. They pay points to bring down their interest rates. So
that's a Western thing?
Yeah, they do it a lot. Honestly, in California, they do it a lot. It's very common. But anyway, so what I wanted to bring up is kind of give you an idea, like you just saw on the screen a minute ago, what a point is and how it works. So just roughly, 1 point is 1% of the loan amount. Now, you might only pay half a point or something like that. Again, it's totally optional. Ask your loan officer, they'll walk you through it. And you have to see if it makes sense for you. So 1 point on $150,000 loan is 1% of the loan amount, which is $1,500.
This is rocket science so far, DeLynn.
That could make a difference of about 1/4% in your interest rate. So it could go from, 3 3/4 or 4%. That's the difference.
So if I pay the point,
if you pay the point,
I can get.
You're going to get 3 3/4. Let's just say, for an example.
Okay.
And you're going to get a payment that's $21 lower.
So $694 versus $716.
Right.
If I pay $1,500.
Correct.
So, all right. Confucius say you pay $1,500 if you divide it out, $21.45. By that cost to get that point,
right.
It'll tell you what your break-even point is.
Right.
So $21.45 in this case is about 70 months to break even to pay that point.
Right, so just under 6 years.
Yeah, so here's the question. Am I going to keep the house for 6 years? Mm-hmm. Do I plan on refinancing in 6 years? Am I going to move?
Right, is this a starter house? And maybe in 4 years, 3-4 years or whatever, we're going to start a family and move up?
And I always try to advise people, if you're not sure, if you think you're not going to, hang on to your money and not pay the point, because it probably doesn't make sense. But if you're committed, this is my forever house. But life changes. So,
but everybody's situation is different, and that's why we strongly suggest that you speak to your financial advisor, talk to your loan officer.
Yeah, get some professional advice. At least get the numbers.
At least get your options.
And I've had people say, "Oh, it doesn't make sense. I'm going to pay $5,000 in closing costs." Well, typically that can be rolled into the loan costs.
On a refinance.
Not
on a purchase.
Well, or paid by seller on a purchase.
Or paid by seller on a purchase.
But, even the seller could pay your points for you to buy down that rate, when the seller's paying closing costs.
So you do have options.
Absolutely. But get them in front of you, look at them, and, see if it makes sense to refinance and pay the closing costs. What's your break-even point? So if you're going to keep the house, and you're going to lower your payment, the bigger your loan, there's no rule of thumb, though, that says, oh, I got to lower my rate by 2 points. No, you don't. Because if you have a $200,000 loan versus say $20,000 loan, it makes
Right.
a huge difference. How much is your payment savings versus your cost? Divide
Correct.
it out, and if it makes sense, then, you know, and the question is, for people who are looking at refinancing, what are they doing with that payment savings?
Right.
Are they paying off the Sears card?
Right. Are they
and the
paying
American
off other debt?
Express?
Are they buying groceries?
Yeah, are
I
they
mean, have they had
living?
their hours cut
Is it-
back and they're like, you know,
Or are they able to put money away for their kids' college or
Right.
save more money for the retirement?
everybody's situation is different. So that's what, you know, our point is don't just, you know, take somebody's word for it. Get all of the options.
Just because
put
your
everything
neighbor
out in
did
front
it
of you.
doesn't mean it makes sense for you.
It's not the same for you. Just
Yeah.
because your mom or dad did it or whatever.
What is that? The Joneses are next door. Where they say keep
they're always
up.
trying
Got to
to
keep
keep
up with
up
the
with
Joneses.
the
They didn't refi, so it's not
My
going to work for
friends
me.
do.
Really, the Joneses?
But anyway, so do you think we made this clearer? Or
It's clear as mud.
Clear as mud, huh?
Yeah, we should run for office.
How'd we do? I know.
I think we did
we're really
great.
good politicians here.
Yeah,
I think
we
we
are
did
good.
really good.
People always say I should run for office.
Skimming it. Yes, Mayor McCheese.
Mayor McKees.
Anyway, I think
can
we should
shake
wrap
hands.
up. Do you think we
Shake
should
hands.
wrap up?
Kiss babies. I love this girl. Just
we
so you know.
appreciate you watching. Share the show. Get this out. If you know anyone who owns a home, is considering refinancing, buying a home.
Buying a home is a
We're trying to
great
push
time.
people off the market, into the
get-
market to buy. So
You know what? If you're renting, you definitely want to look at maybe putting some equity for yourself. It's
That's
definitely
mortgage
time.
expert. Look
Hey,
at that.
who's the expert? Yeah, well, you know, he can put anything up he wants on that screen.
We appreciate your support. Share the show. Get it out. We're on Facebook, YouTube, LinkedIn, Twitter, blah, blah, blah. Dun,
We're on
da, da.
blah, blah. You know
We're
what?
not on
Instagram.
What's the
Instagram.
And what's the other one my son did? You know, something on Snapchat or something. And I said to him,
What's Snapchat?
Do I have Snapchat? And he says, no. I said, do I need Snapchat? He said, you don't know anyone else who has Snapchat. No.
Yeah, I don't think. Does any, you know, send us an email
Whatever.
if you have Snapchat. We'll add it. Okay.
Yeah, we can email too.
Yeah, absolutely. We have the technology.
All right, everyone. Thank you so much. We are today and every day.
Moving forward.
We'll see everybody next week. Thanks for watching.
Have a great week, everybody.
Bye-bye.